Hi, in today's video you're going to learn about triangle strategies and how you can trade them. Okay, so triangles are technical analysis tools that belong to the continuation patterns. These patterns frequently develop in response to the trends. For this, for you to be able to see them, you will have to manually draw them on the chart to easily identify them. Okay, but first you must identify at least two highs, two lows along the trend to draw a triangle pattern. So a straight line should be drawn between the two highs and the two lows, and then extend the two lines together until they form a triangle. So it's that simple. So in this video we're going to learn about the three different triangles, okay, and I'm going to show you how you can draw them, and I'm going to show you how you can trade them. Okay, so these are the triangle patterns you must know. So triangle patterns are divided into three categories: the ascending triangles, descending triangles, and then the symmetrical triangles. So as previously stated, as I said earlier on, each triangle must have at least two highs and two lows connected by two lines intersecting at the apex. So now let's take a look closer at each of the three triangles. Okay, the first triangle is called the symmetrical triangle pattern. So in a ranging market, this triangle pattern appears. The bulls and the bears can't agree on which the market should go. Okay, so let me repeat that. Usually, there's usually a lot of confusions on deciding where the market price will go, either up or down. So if you link the highs and the lows, the triangle's angles will most likely be almost equal. So when a breakout happens, though, you will notice that a strong trend emerges. So according to some people or studies and so on, the breakout usually occurs in the direction of the existing trend. So when do you enter a trade? Well, immediately after the breakout, trade in the direction of the new trend. Okay, the second triangle pattern is called the ascending triangle pattern. So in an uptrend, this is a bullish triangle pattern that occurs. A trend line runs between the lows. The highs, on the other hand, are connected by an horizontal line, also known as a resistance, that runs through them. In the image on the screen, you notice that the triangle formation, the uptrend, is extremely likely to continue after this pattern appears. So what's the best way to enter a trade? Well, at this point where the resistance level is broken, at this point you should enter a trade. Okay, and the last triangle pattern is called the descending triangle pattern. So when there is a downtrend, the descending triangle pattern appears. So you have to connect the highs of the prices with a trend line, so you have to draw it. Then the lows are similarly linked, but this time by a horizontal line that serves as a support. So the optimal time or the best time to enter a trade is when the price breaks through the support and the downtrend lines. Okay, so refer to the image on the screen. So to conclude, triangle patterns are continuation patterns of a trend. When this pattern emerges, the trend is almost certain to continue in the same direction. So your major goal is to pinpoint the time at which price will break out and begin to create a trend. So when working with longer time intervals or time frames, triangular patterns will work well. That means you should use candles on a time frame of 5 minutes, 15 or 30. Okay, so this makes identifying these patterns and entering a longer trading position much easier. So with indicators like the MACD, MACD, triangle patterns function well. When a breakout occurs, trade volume increases and the two MACD lines separate in most circumstances. So refer to the image on the screen. So this is a confirmation of a new trend. So take a look at the image on the screen again, for example. Okay, so this is it for today. If you learned something from this video, give it a like. For more videos like this, go on and subscribe. Bye for now.